Realist podcast. I'm Dr. Ryder Waldron, and with me as usual are Dr. Marcus Neff and Dr. Troy Stevens. Marcus, how's it going tonight?
Going really good. Got the kids back in school this week, so we're going to start into the back-to-school routine.
Oh, man, that's a great feeling when your kids go back to school. Well, Troy, how about you?
The wives love it. That's
yeah. How's your week been going, Troy?
It's going pretty well. I got hit pretty heavy in hygiene today. Talked to a lot of people, so I was real excited.
Mentally drained. Well,
yeah, I'm a little drained, but that's okay.
Luckily, tonight we're going to class the joint up, and we have a guest with us tonight. So let me introduce our guest to all our listeners. He is the president and founder of Cody and Company. He is the co-author of Secrets of a Tax-Free Life. And he also used to be in law enforcement and now has transitioned into being a certified tax coach. So, Fred Cody, welcome to the Dental Realist podcast.
Thank you very much for having me.
We're happy to have you. Thanks for being with us. So, well, we're probably just going to dive into some questions, but I think one thing the three of us have been wondering is, how did you go from a career in law enforcement to a career in working with taxes and accounting and things like that?
Oh, it's kind of a long story. I guess before I went into law enforcement, I was an economics major. And then I went and I followed in my dad's footsteps, and I joined the NYPD. And, it's a 20-year retirement, so at some point you have to kind of think about, okay, what am I going to do next? And I thought I wanted to go into financial services, but I figured, there's a million cops that go into financial services. I need to do something to differentiate myself. And I said, well, I'll become a CPA first. And I went, I got my CPA, and I decided, hey, I really like this. And then I got into taxes, and here I am today. I have my CPA, and I have my firm.
Cool.
Very nice.
And, yeah, I can't think of a better person to be involved in tax planning than a law enforcement officer to me. Because I would want someone just like that doing my tax planning. So, anyway, Marcus, do you have a question for Craig?
Yeah. So as dentists, sometimes we feel like we're kind of unique as small business owners. Is there really a difference in CPAs? I've heard some CPAs market themselves as catering to healthcare, catering to dentists. Does a dentist need a different kind of CPA than the general business owner?
I honestly don't believe they need a different type of CPA than a general business owner. You're all running a business. It's a different business. You're all running it. And I think, any CPA that is good and deals with business owners should be able to deal with any nuances in the dental or healthcare field.
Okay. Very good.
Yeah, that makes sense.
You might know, I got a question. What are some flags that might indicate that a business owner might need to replace their current CPA? So, say what kind of things would you see and kind of want to look out for?
We do a lot of tax planning in our firm. So, when I have somebody that's kind of unsure what they want to do, because it's hard to break those relationships. I'll ask them, what was the last time your CPA came to you with an idea that's going to save you taxes?
Sure.
And that you kind of get the glazed over look and say, well, never.
Yeah.
Okay. So that kind of puts people in the right direction sometimes.
Perfect.
So, explain to me, Craig, if you would, the difference between a certified tax coach versus just your run-of-the-mill accountant.
Okay. So, I'm a CPA, so I'm a certified public accountant. And then I went and I took take ongoing training to become what's called a certified tax coach, which is really just a designation given by a group of people that meet certain requirements. And so we typically focus on being proactive, where most accountants, most CPAs, they put the right numbers in the right boxes. They're very compliance oriented, but they're not looking forward to see what can we do or what can you do a little bit differently to take advantage of what the tax code says you can do. So that's really the difference between a typical accountant and somebody who's also a certified tax coach, someone that's being proactive.
Okay, and that's interesting because when I first got out of school, when the three of us first got out of dental school, it was 14 years ago, and I had an accountant for the first year or two of my career. And I guess it was probably a couple years in, I just felt like he wasn't being aggressive enough. And the only reason I started working with him because the dentist I shared an office with, he used him too, and just kind of, I was looking for an accountant. He said, here's your guy. Well, it came back that he wasn't being as aggressive with this other dentist either, and he ended up owing $100,000 in taxes at the end of 1 year. And I had bought practice, and I decided that was a good time to transition to someone new. And I've actually been really happy with my accountant for the last decade or so. So I understand that is a tough conversation to have when you decide to change accountants. But I would say if anyone isn't happy with the accountant that they have, contact Craig, contact someone else. But it sure saved me a ton of headache with transitioning to a new accountant. So it is a tough conversation, but I would highly recommend people do it because it's tough to get rid of someone else that's working for you. But they are. I don't know, Craig. Would you agree that the accountant works for us as the business owner, or is that how someone should look at it?
Yeah, he works. He should be part of your team, and he should be communicating with you. And really a lot of it comes down to communication. You need to. You can't go to a guy in March or April and expect that he's going to do a whole lot for you.
Yeah.
All right. So you need to communicate with him. During the course of the year, and he needs to communicate with you during the course of the year.
Yeah, I had an experience when I first got out of school. I used when I bought my practice, I just kept using the accountant that the firm or that the office had been using, and found out putting self-employment tax in there, and I got nailed with a huge chunk of change trying to get that taken care of.
Yeah, that'll happen.
So
that'll happen.
So, for some of our listeners, would you recommend it's best to have a CPA that's someone located there in the same town as you? Is it more beneficial to meet face to face? Can most of these things be done long distance? Is it better to find an accountant, for instance, somebody who's in a different state but is a great accountant and has a great reputation?
Well, 10 years ago, I would have said, yeah, you need somebody that's local. Okay, but today with Skype and Zoom and WebEx, you can meet with anybody, across the world. We have, I'm in New York. We have clients in California and Oregon. And we typically we do monthly calls with our clients.
Sure.
And you set them up on Zoom or you set them up on WebEx and, use a time that works for both of you, and you take that half hour, 45 minutes, and you go over what you need to go over. And it's just like you're in the room next door.
Yeah.
So technology, has really made a big difference.
Certainly. Yep. I would agree.
Yeah. So is there a big difference between, I imagine as an accountant, you have to be, educated on different tax codes for different states. How different are different tax liabilities from state to state? Because I always hear of people in Texas and Florida. There's no income tax, stuff like that. So how does that affect you as an accountant?
So when we work with clients in other states, we make sure that we brush up on the nuances in that state, versus the states that we normally work in, our home state, let's just say. So, and the good thing is I'm part of a group where I have access to people in basically every state in the nation. So if I have somebody in California, and it's my first client in California, I'll talk to somebody I know in that state and say, okay, what else do we need to look at? And, there's all sorts of manuals. You can give you state-specific stuff. But you just have to be willing to learn, willing to learn what might be a little bit different. And every state has a little bit of a nuance versus, your other states.
Okay, that's interesting.
One thing that I think is kind of interesting is, as a business owner, everybody says, oh boy, you should do this and buy this and do that because it's a tax write-off. And then,
Yes.
you always get that. And then all of a sudden, when you get out and you own your own business, you find out that, yeah, you can write certain things off, but it's only certain percentages of things, of course. It's not like you can write off 100% of stuff. So what is the, like a proactive way we can approach tax planning and how it can minimize your taxes?
Well, what we do is we look at things that you're currently doing that you're not writing off correctly. So if the code says you can do it and people are not doing it, then they're already spending the money, but they're not getting a tax deduction for it. So if we're able to find a way to make it as a legally deductible expense, now you're not spending any more money, but now you're getting a deduction. Because, if you're in the 35% tax bracket and you spend $1, you're only getting 35 cents back. You still lost 65 cents.
Right.
But if you're already spending that $1 and you're not getting any benefit, now you find a way that you can legally write that $1 off. Now you're getting that 35 cents back that you weren't.
Right. Is it legal to write off a cabin or an airplane as a dentist?
Is it legal to write off a what?
A cabin, like up in the mountains?
I mean, for what would the reason be?
Just for serenity and peace.
I don't think that. I don't think that would pass. I don't think that would pass. Now, if you happen to take your staff up there for a meeting, it's a different story.
Sure.
Oh, really?
So
that's the creative part, right?
Yeah, being creative.
Oh yeah. I mean, you have to be legitimate.
Sure.
Creative but legitimate. If the code says you can do it and you're doing it correctly, then that's okay. But don't do it incorrectly, and make sure whatever you do, you document.
Yeah, keep receipts. Definitely got to keep those receipts, right?
Receipts, leases, whatever it is that you're doing, you make sure you have the proper documentation when you do it, not a year later or 2 years later, when you get a notice.
So, a big issue with a lot of our listeners, well, I would say pretty much all of our listeners, because we all have student loans, and dental school student loans are outrageous right now. So one thing that is, debatable, I guess, is whether you pay down all your student loans as fast as possible, or is it better to pay the minimum monthly payment on those student loans for 30 years or whatever, and then invest that other money or use that other money in a different way? What's your opinion on that?
Well, that really does come down to a personal, preference, what somebody wants to do, because, you get to deduct that interest, but once again, you're only saving 35 cents for every $1 you spend on interest. Mm-hmm. Whereas if you paid off sooner, you saved all that interest that you would have had to pay down the road. But okay. It's a personal preference versus the person that says, I'm paying 6% interest on this loan, but I know, and over time I'll have 8% interest. So that 2%, I'll come out 2% ahead. But it's really a personal preference, and I think, we find a lot of dentists would rather pay that debt off sooner than later.
Okay. Yeah, so there's no tax benefit to one way or the other, I guess, is what you're saying.
No, because when you pay that loan off, you don't get a deduction for the actual principal. Okay. The only deduction you get is for the interest. So, okay. You still have to, it's a cost.
Yeah.
You only get, and so you're saving 35 cents for every $1 you spend.
Okay.
Can I ask a follow-up question on that? Ever since I've been at a dental school, of course, we always thought, dental student loan interest is a tax deduction. However, I've always had a problem with I guess I make too much money. I can't even write off my student loan interest. Do you find that is a problem for dentists? That we fall into that weird category where we make just a little bit too much to take advantage of some of those deductions?
Yeah, I mean, a lot of people fall into that, that category where they're making over that threshold number, and they can't deduct that interest.
Sure.
Yeah. All the more reason, if you're in that case, to actually pay that down sooner than later. And it's a happy dentist when he's paid that loan off.
Yeah.
Yeah.
That is for sure.
That's a long time to be paying. That it feels like we're going to be paying forever. So yeah, I'll be thrilled. I may be dead, but I'll be thrilled that it's paid off.
My life insurance might be able to pay it off.
Sorry, Marcus, I didn't mean to interrupt you.
Oh, no, you're fine. So I'm sure there's mistakes that every business owner makes in regards to their taxes. What are some of the biggest mistakes? Or maybe there is a biggest mistake you see?
So I would say, the biggest mistake is failing to plan. people spend a lot of time. They're going to buy a car. They spend time. They do research. When it comes to taxes, they kind of don't plan. They set aside money, but they don't plan for ways, that they could actually reduce their liability, be proactive. So that's probably the biggest mistake we see. After that, I would say choosing the wrong entity.
How do you mean as far as that? I know a lot of dentists are. I mean, it runs the gamut. For instance, I've been an S corp. Ryder, are you an LLC? Is that?
I'm an S corp, but I had a brother-in-law that's an LLC. Troy, I think you might be an LLC if I'm not mistaken.
Yeah, we're a PLLC, professional limited liability company, right?
Well, professional, that's questionable at best.
Well, it really is.
So you can be an S corp. You can be sole proprietor. You can be a C corp, which you don't really see too often. You can be an LLC taxed as an S corp, and the savings can be significant. I was working on a tax plan today for a dentist, and the difference between him being an LLC and an LLC taxed as an S corp is over $6,000 a year in taxes.
Wow. It can be significant.
That's a significant amount. Put that towards his loan every year. How much do we pay that off?
Well, and you plan that over 30 years of a career. I mean, that really, wow, that's amazing.
Right.
Wow.
So that's the importance of planning. See what you can do, what you can change, and how you can do it a little bit differently and take advantage of it.
Yeah. So is it best to, right when you get out of school, grab an accountant like yourself and get planning those taxes immediately? Because I think a lot of dentists and dental students, they get out of school and think, I'm going to make some money. I want to get going on that first, and then we'll do some tax planning, retirement planning afterwards. But it sounds like it's best to get this planning going ASAP.
It's always best if you do it before.
Okay.
You could always go back and clean up whatever was done, maybe a little bit, I won't say incorrectly, but not tax efficiently. But if you're going to do it, why not do it straight from the beginning?
Sure, makes sense.
Yeah, do you see a lot of dentists that do their own taxes? I mean, I hear so many people saying, I save a lot of money by not having an accountant and this and that. And my father-in-law was a dentist, and I remember talking to him, and he said, an accountant it may be expensive, but they'll get you back that much plus some in the planning. So, do you see a lot of dentists trying to do their own taxes and business taxes?
We see more dentists trying to do their own accounting, versus their taxes. But up in my office on the wall, I have a bone saw.
Yeah.
So I could actually cut an arm or a leg off. Okay, but I probably wouldn't do it right. So just because you could go out there and buy TurboTax or something, it's probably not the best way to go. It's not the best use of, your time, versus having a professional that, this is what he does for a living.
Yeah, every dentist's practice and situation isn't the same. So it's best to get that unique perspective and somebody who can really cater to your unique situation. Is that correct?
Correct, because even your personal situation plays into how you should plan.
Number of children, your goals, all those kind of things.
Exactly. Are you single? Are you married? Do you support your parents? Because there are different things you can do depending on the entity choice you are that affects all those different things that you might want to do. Sure.
Well, yeah, and there's probably not a lot of accountants out there doing their own dentistry. So if you're a dentist, please try not to do your own accounting.
That's right.
It just doesn't make sense.
Yeah. There is a lot that try to do it, though. I think to try and save a buck.
Right, but it's kind of like I say, people look at their CPA as a cost item, and I look at it as an income. What you're paying me and what I'm able to save you, you're making money versus doing it yourself and just having a tax liability. So.
Absolutely.
It definitely makes sense. And no matter, I like to say, no matter what you're doing, have a professional do it and let it be done right. But there are a lot of people that prefer to do it themselves, and so be it.
Sure,
so be it.
Might be a little bit of work, but yeah. So,
Right.
so does a certified tax coach overlap in any areas with financial planner, for instance?
Not really. I mean, I'm a firm believer in having a good team.
Sure.
And having a team that communicates, whether it's your planner, your attorney, your insurance guy. So, the more people talk, the better it is going to be for you.
Do you recommend ever having any kind of a mastermind meeting of those people? Attorney, financial planner, tax planner?
Typically, I wouldn't say a typical mastermind, but we'll if something comes up and we need to have a conversation with the attorney or the financial planner, we'll have a conversation with them.
Sure.
Especially if they're purchasing a practice or they're purchasing a building. Okay, let's get everybody involved because people look at things from different perspectives, and the sum is better than the individual parts.
Yeah, that makes sense. So maybe not on a regular basis like you would meet. You said you meet with your clients monthly, but maybe as the situation arises, you would maybe draw in those other people along with you.
Exactly, because if you're communicating with the client, you're going to know what's going on. And then when you know what's going on, you're going to know that, okay, we should talk. We need to speak with this person. Let's set up a call with the attorney.
Oh, very good. Very good.
Yeah, that makes sense. So Troy brought up earlier the mysterious write-off, and I always hear people saying, well, you can just write that off. And I am just a dumb guy, and I don't really understand the whole write-off principle. I had a friend one time ask me if I could bring him some toothbrushes. And I'm like, well, yeah, guess, whatever. He's like, well, it won't really cost you anything because you can just write it off. I'm like, well, I don't know. It actually cost me like $1 to buy that toothbrush. So can you just explain in simple terms to people like me what a tax write-off is, how it works, and what are some basic things that, as dentists, we can write off in our careers?
Okay, so a write-off is anything that's considered a deductible expense, and to be deductible, it's got to be a necessary part of your business. So if you're giving toothbrushes out to your patients, you buy that toothbrush, you give it away, it's a cost, and you get to deduct that cost.
Okay.
The benefit of that deduction is only 35 cents because you get to deduct $1, you're in the 35% bracket, so you save 35 cents, but you laid out $1.
Mm-hmm.
So you're still net losing 65 cents.
Okay.
That's what a deduction is. So you don't want to just have a deduction to have a deduction. Like when we do tax plans, that's a frequent question we get. Well, am I going to have to spend all this money to get this type of deduction? And the idea is, these are things you're doing already, but you're not doing them correctly, or you don't realize that you're doing them, and you can take a deduction for them.
Okay.
Can I ask a question regarding equipment? We always have dental suppliers bombarding us all the time to buy this, buy that. We need this for our office, the new latest and greatest. The new trend now is, like CAT scans and CAD CAM units that are very, very costly. I mean, $140,000, $150,000. How does someone tax-wise in incorporating it into their practice? They always talk about the Section 179. You can just, you can write it off, blah, blah, blah. But you still have to make that monthly payment on that unit every month. How do we, as dentists, look at that and say, okay, when does this make sense for tax purposes to buy this kind of equipment?
I always say it makes sense when it's a piece of equipment that you need, and you're not just going after that shiny new object. So if it's something you need for your practice, you look at it, you're going to buy it, okay, then you get a tax deduction because you're going to write it off. But to purchase it just because you want to write off, it's the end of the year, and he comes in and
they throw that at us all the time.
Exactly. Yeah. Now it's a different story if you actually need the equipment. If you need the equipment, the added bonus is you get to write it off, and it's December, so you're going to write off $150,000 for something you spent in December. But if it's something that you don't need, you just took $150,000 out of your pocket,
exactly.
for that, $45,000 tax savings.
Yeah, that's what I've been thinking, the same along those lines, making sure I was on the right path.
Right. So I kind of call it the shiny object syndrome. Spending money just because it looks interesting. Or somebody says, "Well, you're going to get this tax write-off," but I'd rather have honestly that dollar in my pocket than that 35 cents that I'm going to save in taxes.
Yeah,
absolutely.
And suppliers do that all the time, don't they, guys? I mean, we get how many things in the mail every year, and it must work. It must fool some dentists, or they wouldn't send those things out every year. So they do it all the time and make it sound like you're getting a big piece of equipment for free if you just buy it now at the end of the year.
Yeah, you can just write this off. You can just write it off.
The big difference is if you need that equipment versus you don't really need it.
Yeah.
Yep.
Makes sense. Very
Absolutely.
good.
Yeah.
So there is a pretty big shift in dentistry right now. It seems like more and more dental students graduating from dental school are going into associateships or employee situations. So the ownership of or dental practices is going down. What I'm getting at is, what value does a CPA or a certified tax coach bring to just an employee dentist? Why would they want to work with a CPA?
Honestly, to somebody that's just a W-2, I don't bring a whole lot of value to that person.
Okay.
Do I bring better value than H&R Block? Yes. Okay.
Absolutely.
But I can't say your typical CPA firm where I could provide more value than you would get at your typical CPA firm, because there's not a whole lot of planning that can be done for somebody that's a W-2.
There just aren't the advantages that a business owner has.
Correct. And you see a lot of dentists that are working for these bigger dental groups, and they're paid as a 1099. So there's value to be brought there, but the issue there is going to be really the dental group one day is going to have an issue with the Department of Labor, with the IRS, because these people are really employees. For the most part, everyone I've seen, they're really an employee.
So they're treating them, they're paying them as though they're an independent contractor, but in reality they're an employee.
Correct.
Okay.
There's a whole list of tests to determine whether you're an independent contractor versus an employee.
Yeah. We've ran into this when I've had associates, because as an independent contractor, they're supposed to provide their own employees, their own equipment, their own everything like that. And you find in dentistry that is not usually the place will provide all those things and still call them an independent contractor when it should be an associate. Is that correct?
Correct.
Yep.
Wow.
Yep.
So it's something to be careful of, and it's really the more on the practice side. They're the ones that are going to have the bigger liability down the road. If something, if the IRS comes and knocking.
That's interesting. I'm learning all kinds of stuff tonight.
Yep. So be careful, Ryder.
Yeah. Well, I've got all these independent contractors coming in. No, I really.
So do you want to talk about some kind of little far out different tax deductions that are out there?
Sure. Yeah. Give us some of those.
So we're all familiar with the home office and the dentist that has an office in his home, and who's maybe spends 2 days a week, works out of the house, doing all this paperwork and stuff like that. We're familiar with that, right?
Yeah.
Yep.
So the thing that also opens up the door to other deductions that now become allowable. Okay. Now you could actually travel from your one office to the other office, so that travel becomes deductible. And that's somewhat common, okay? But have you heard of the home athletic facility?
No.
So the code allows you, if you have a home office, you can actually have an athletic facility, an on-premises athletic facility for your use of their employees and their employees. So that opens the door for your pool, your home gym, to become deductible.
Wow. Interesting. Wow. That's very neat.
Is that even if they don't use it? What I'm saying is, say you open it up to them and say, they can come in and use it, but they just choose not to? Or do you have to prove that they've actually come to use it?
No. Well, let's see. You would be an employee. Okay?
Okay. Yeah.
And if you're using it, okay, as long as it's being used.
Okay. I see what you're saying.
Gotcha.
Just because, you can have working in one office and only one staff member working in the other office. So it doesn't make sense for the other staff members to travel to that office.
Yeah. Very, very cool.
And that's in the code. It's not a gray area. That's in the code.
Yeah, what other little tidbits do you have that go along those same lines?
Well, I mean, then there's, hiring your children. Tax court says you can hire your children at age 7. Okay, for me, that's a little aggressive. I like to wait till they're about 11 or 12 years old. You can document what they do, all right? And it has to be documented, and then you pay them. And then you do 2 things with that. Let's just say they go to a private school, or maybe they go to a camp. Now, instead of you paying for the camp, you let them pay for the camp. And when it comes out of their account, and it covers deductible expense for you. Or they take that money every year and they put it into a Roth IRA. So by the time they're 18, they've saved about $40,000.
Wow.
And as long as you do it correctly and you document, you actually pay them, it's okay. If you don't do it correctly and you don't document it and you don't pay them, it's not okay.
Okay.
What kind of tasks do you have to have them do at the office to put them on payroll?
It has to be something that the compensation is reasonable for.
Okay. So like if you have them come in and shred papers, you can't be paying them $30,000-$40,000 a year.
Exactly.
Yeah. Okay, perfect.
And we've had clients where they've done this with younger children, but they've used them as models, and they're actually on brochures.
Yes,
but it's kind of like a 1 or 2 shot deal. It's not an ongoing process, and that's okay. But you can't hire your 7-year-old to start filing insurance claims.
Yeah.
Unless he's a prodigy.
Or answering the phones and scheduling appointments.
That's right.
Wow. Need to put these kids to work, I think, now.
There you go.
Wow, that's interesting.
You got some kids that can be models, don't you, Ryder?
Well, I mean, I've probably got several that could be, yeah. Need to start getting them on the payroll. I mean, that's interesting. I never thought about that. My wife, she used to work for her dad when he was a dentist, when she would go up to the office at night when she was like 10 or 12 or something like that and clean the office for like $3 a night. And I thought it was just something nice for her dad to do, but maybe he was getting a tax write-off for that or something like that. I don't know. That's really interesting stuff, I think.
Yeah, it's pretty cool stuff. In the accounting world, it's cool.
Yeah, yeah. I mean, that's interesting. So tell us about your book, Secrets of a Tax-Free Life.
So that was I co-authored that. That was actually an Amazon bestseller. It came out about 3.5 years ago. My most recent book is actually the 10 biggest tax mistakes that cost business owners thousands. Okay. And that we talk about, some of the things we've already discussed, such as failing to plan, choosing the wrong business entity, the wrong retirement plan, family employment, health benefits, medical expense reimbursement plans, auto expenses, the home office, entertainment, what the rules are for travel. So we go into that. Okay. It's just like a little mini Bible of things that you can do, and you should talk to your accountant about, how do I do this?
Yeah, that's interesting because I like books that just get to the heart of things and really give you the information you need. So that's great. I'm going to have to look that up. I wasn't aware of that one.
We are actually going to offer your listeners a free copy of that book.
Oh, wow. That's very cool.
So before we're done, I'll give you that link that they can actually go to.
Yeah, that'd be great.
Thank you.
Yeah, so before we wrap up, why don't you tell everybody where they could get in touch with you, if they want to send you an email, phone number, how they get in contact with you and your firm. Because I think after this, there's going to be people that are interested in that.
So our office phone number is 516-869-4051. My email is craig@ccodycpa.com. And our website is www.craigcodyandcompany.com. And if you go to /dental realist, you can actually, that link will take you to a page where they could actually request a free copy of our book, and we'll mail you a paper copy of the book.
Okay.
That's awesome.
Nice. Thank you so much.
Yeah, we'll put that in our show notes and everything, so people will be aware of that, and then post some links online. That's great. That is exciting. Sorry, I'm just making notes myself here. Do you guys have anything else you want to ask Cody or ask Craig while we have him on here? Because these nuggets have got me thinking.
Yeah, I think I've got a lot of answers and stuff, a lot of things to think about. I appreciate the information.
Yeah, thank you.
Yes, and the biggest takeaway should be the importance of communicating with your CPA.
Yep.
Really, that's the biggest takeaway.
Yeah. Yeah, my accountant said a good write-off is to take him to lunch. So it probably is. I don't know. I think he's just trying to get lunch out of me, but whatever.
Is he a good friend of yours or something, or what?
No. I mean,
No.
he's my
Okay.
accountant. I mean,
Yeah.
sure. You know, whatever. Depends on how taxes come back at the end of the year. Depends on how close we are as friends.
There you go.
But, well, Craig, we really appreciate you being with us tonight on the Dental Realist podcast. I think this information, guys, is really been honest. It's been important. It's stuff that I think a lot of dentists don't normally think about when they're getting right out of school. I know I didn't. And I feel like even in the first couple of years, like I probably could have saved a lot of money with just some proper tax planning. So you guys have anything else to add before we sign off?
No, we really appreciate you. Thank you.
Yeah, absolutely. Thank you for the info.
Thank you very much for having me.
Appreciate it.
You bet.
So this has been episode 24 of the Dental Realist podcast, and we will put some notes in our show description and everything like that. So go get in touch with Craig, Cody, and company, and we will see you on episode 25. Thanks.